Hey, and welcome back to Financial Reactions. Today we're going to take a look back through our covered calls and dividends for the last week. While you're here, if you would, like and subscribe, and let's get right into it. As you can see, we have our 5 holdings still, and this is the account where we sell the covered calls and transfer the money to the dividend tracker. And on the account here, as you can see, we have BAC, CGM, Rivian, Tesla, Verizon, Citigroup, Bank of America. I think everybody knows General Motors. I picked a couple of EVs because I want to keep an eye on those. I've been doing a lot of looking at Tesla, and they had that big hit. And they also have a lot of big stuff coming out. So what's your opinion? Say down in the comments if you think Tesla's a good buy or a bad buy. Because as you can see, it took the pretty big dip. Let's go to charts and look at Tesla on the chart. You can see that was a pretty big fall it had last week. We're still writing the covered calls on it because it does have good premiums, as you can see. Oops. We're going to go August 7th. See, we can still go out a decent amount. We can go to like the 325 strike and still get $3. So I'll probably go out there and I'll do these Monday morning. I'll get all these entered and I'll see. And now we'll take a look at what we've done with that money. In the dividend tracker, we have been buying shares of, we have 20 different holdings. And these are the holdings. And every week I take the money made from the covered calls and I buy the first 10, and then the next week I do the other 10. As you can see, we've had, even with a down market, we still have some winners. We are got a variety of, some of these are weeklies, some of these are index funds, and some of these are quarterlies from the Dividend Aristocrats. When you look at these, you can see I like this because it does it it shows drip, buy, buy. So these it keeps track of all my transactions, so I don't have to do a spreadsheet separately to do it. And as you can see, this pays weekly on the drip. And we've been getting about $5, $3, $3. And as far as buying in, we had a real good start at $7.40. That was for the covered calls. Then we had a $400, and this one was only $263 because the premiums were not as high. How's the dividends been tracking? It looks like 50%. 7 cents. Looks like it's ticking down because it was, up to 11,987. However, it got down to 5 and it came back up. It has had a price increase. So as you can see, it's back up to 783. And as we're buying in on the dollar cost averaging, that's always good. Ben Franklin Resources in Trinity. What is Trinity? That is a monthly dividend. 17 cents, which was kind of low. Oh, that's right. Sorry. It went from quarterly to monthly. That's why the actual value is down. As you can see, it's 17 cents all across. So that one's going to be your steady Eddie for returns. And if the price keeps holding, that's also a double bonus. As you can see, the price has gone up a little. Ben Franklin, the price has gone up. This is Round Hill. That's a weekly. The price has gone down a little bit because of the dividends. We are up. Apple Hospitality is a REIT, so that's a monthly, and it's gone up just a little. SWPXS, this is the S&P 500 index, and it's designed to pay a low dividend and just capture on the growth. And it's like a 3% annual dividend. Attila Group, I've actually held this in my personal account, and you can see it's taken a little, it was trickling up, and then it started falling again. You can see it had a couple of upticks, and now it's fallen off. Kind of had a rough, some of these had the overall market got rough on them. So let's see how that's pretty much it for the covered calls. Let's look at the portfolio. Overall, it's down. Dividend Aristocrats has had a dip. A lot of things had a dip the last week or so. Because remember, Caterpillar used to be at the top because it had that huge run up to like over $900. As you can see, it's been steadily ticking back down. However, it is a dividend aristocrat, and you know you're going to get your $1.63 every quarter. So this is a long-term growth vehicle. Let's see. Oh, Ben Franklin, that has had the good price increase, even though it's only got a 3% dividend. You can see it's up here because of that. Black & Decker's jumped up, so that's good to see. T. Rowe Price has been consistently up here. Its price has continually gone up, so that's nice. 3M has made a recover. Some of these, like Johnson & Johnson and Coke, were down. And the Schmuckers, a lot of the food was down when we started this, but they've come back up. And as you can see, Attila Group over here, which is also from this is a different holding from the covered calls, but I have that in the covered calls also. As you can see, overall for the time we've been tracking it, it is up. And then there are a few still down here. Okay, index funds, how have they been doing? Looks like they've been doing pretty good. They're profitable. If you look through here, anything that's over, we started at $10,000. So even if it shows red because of you've bought more with dividends, if you have over $10,000, you're above your start price. Ah, look at that. They're all in the green. I think one or two were in the red last time. The Russell 200 or the 2000, look at that one. That took a nice jump. And these are, as you can see, these are index funds, so they're geared toward capital growth, not dividends, but some of them do pay small dividends. So that's good. An index fund, obviously, that's the one you're young and you're going to just put it in and not worry about it. Your index, you diversify amongst the index funds. These are weeklies. We're to Rex shares. As you can see, most of these are in the red. And how many of them have a market value? Only the top 4 have held their market value above 10,000, and these 4 have dropped below. This one's actually had a price increase. Not much. It went up. Oh, see, it was up to 17 and back down to 12. But it's consistent lately. It pays about a 10-cent dividend, 30%. That seems to be in the ballpark, upper 30s to 40. And this is a weekly, so there's going to be a lot of those. And 10 cents is in line. A lot of the Rex shares do pay around that 10 cent. None of them are huge except for, see, even at 13 cents. It's listing at as 100%, but that's because the share price has fallen. And the dividend has also fallen down to around that ballpark. Roundhill, how's Roundhill doing this time? As you can see, it's overall it's fallen and it had a little recovery at the end. Let's see if that helps us out with anything. So up 20% on ARM. So you can see this is declining, and it's up and down. It's sporadic. It did pay 49 cents, but that was off a high of 216. Let's look at the price. I do believe this one had a really huge run up in price. Yeah. See, it got up to $96 and now it's back down to 41. And that is, I believe we discussed this. This is one of the really bad things with the weeklies is their volatility and underlying price is going to be dramatic because, like I said, this one shot up and then it fell back down. Yeah, that's the weeklies. I'm beginning to just, these are something you're just going to have to, buy and hold and try and keep it in. If you're going to follow anything on my dividend tracker, just keep a track of which ones are, middle up, and then stay away from these that are declining, because you can see the whole market value, these bottom 1, 2, 3, 5 have actually lost from your investment. The Robinhood is about even with all the dividends you've received. It's still only a little over $10,000. And obviously this one's up here because the share price, we started at 30, low 30s. And then the average cost, because don't forget, we were buying with the dividends at 96. So this average cost is actually going to be a little high. Cost basis is 18,000. So that's how much we've paid in the 10,000 initial plus dividends. And the market value is still 22,000. So if you bought this when we started in March, you would still have a good return. You're looking at 20% in 6 months. I would not look at that to continue because, as we said, the price is falling. But some of these might be good to throw a few bucks in your own portfolio and see if you like the weeklies. Now remember, if you're doing this in a regular account, you are going to have a tax liability on the dividends. I do it in a 401, so I don't have to worry about the dividend hit. Yield Max Group 1 is not doing well. Chippy, GPTY, and 5E. These are groups. These are not individual stocks. As you can see, they do crypto, Magnificent 7, Universal, Ultra Options. So these are kind of groups. So you're not relying on one individual stock, but they do a lot of the high tech and AI. So you get the volatility because that's where the premiums are high. But still, Chippy is still holding its price. GPTY is holding its price, and 5E is hanging on. The Russell is down a little, but not much. And it pays a lot of these. Look at, see, they're in the 40%, 50%, 100% dividends. So these are the high yielders, high risk, high reward. This one you can see overall the weeklies from Yield Max are down. Look at that value decline. And this has also had the AMDY, which shot up and then has fallen. And as you can see, a lot of these have tanked recently, but a lot of these, remember a couple of weeks ago, the prices were going up. And so we were buying shares at the higher price, and that jacks your average cost up. Which one was I following? I was following Morrow, and this one, it's 468, so it's stabilized, but it's paying a 200% dividend. So as you can see, you're still at $12,000. So even with a really decent deduction in price, almost over $1, you're positive overall because of that 200% dividend. So remember to look at both columns to see where you're actually at. And over long term, if you were doing dollar cost averaging, say you were throwing a little money into some of these every week, so you're putting $100 in 5 different ones, you would be getting a better dollar cost average. And Defiance, that one's down. That one hurts. As we can see, our best winner is only 60%, and it's these are not as high yield. We only have one over 50, but 20 to 30, if it's holding its NAV, like these top four, are probably decent in this current environment. Now, with the war in Iran kicking back off, we'll have to see. Oil prices are going back up, so we might see a pullback. And then Granite shares, these are the ones that are all terrible. As you can see, yeah, these have all fallen in share price drastically, and they don't pay. I mean, 100% dividend, but the price is falling so fast it doesn't offset it. So I don't know what they're going to do. I've heard that a lot of these might get collapsed or just closed, and a couple of them from other weeklies I've seen have done that. They just dissolve the fund, and whatever cash you have it in is what you get back. So be leery of anything that, when you're doing your own research, if you see a long history of fall, you'll probably want to stay away from it. Monthly dividend stocks. Okay, these are a little up. And what do we got? Apple Hospitality. Remember, that's not Apple like your Apple phone or watch. This is Apple Hospitality. This is a REIT. It's done okay. It's gone from 12.19 to 16.51, so that's pretty good. 35% return. And where's the breakout? Is here at Realty. Like I said, that one was positive the last couple of weeks, but it's fallen off recently. Some of these at the bottom, none of these are terrible. As you can see, your lowest is 14%. You're still at 9,300, so you're less than 1,000. Oh, that one's much worse, 14%. But it's also a very low price. Let's take a look at Apple Holdings. Its dividend was 8 cents. So obviously that's going to be all price increase. Yep. And you can see it's following the market there lately. Dividend 8 cents. Is that normal? And yes. So that is it, completely in line. It's had a couple payments above, monthly payments above. Don't forget monthly dividend. And these are stocks. And by stocks, most of these are REITs. Properties. This is a new floating rate income fund. It paid 8 cents also. And that's steady. So these are your brick and mortar, or not your brick and mortar, your base investments, where you can diversify amongst different. You got REITs, which are for when REITs are usually property management, that type of thing. And a lot of these pay 10 cents, and they don't grow quickly in share price because they're required to pay out so much of their income in dividends monthly. That's how they're set up. So when you see it going from 15 to 17.55, that's actually really, really good. That's something you want to see. So a couple of these are probably pretty decent to look into. And these are our ETFs. So you can see PEY, DES, NDL. Here's SPY. A lot of people follow that one. JEPQ, QQQI, QYLD, JEPI, and FEPI. Those are a lot of the bigger name funds that have been around a while that people are familiar with. The PEY, let's see why it's doing so well. It paid 10 cents on the dividend. It pays that monthly, and it's up from 7 to 10, so that's a positive. Let's take a look at its... Okay, and it's nice uptick in price. So that's, when you see that on a monthly, that's pretty good. Anything QQQI, that's the NEO's NASDAQ, 2%. As you can see, if I didn't go through it too quick, a little more volatility in this one. And this dividend of 63 monthly. And that seems to be in line. So that's a good dividend. So a lot of these, I recommend getting you guys, if you watch this and you're still here, thank you. But like and subscribe, and also go ahead and find your own dividend tracker. I paid for this one so I could do more holdings, but if you're only interested in a few, they do have a free tier where I think you can have 10 or 20 holdings. And I do recommend, if you're new to dividends, go ahead and get a dividend tracker and just start following along, because like I said, if you get the free one, it's just like this, where it's not real money. This isn't tied to any account, and you can play with it. You can do a lot of good things in learning about dividends. All right, guys. Well, thanks for joining me. This has been fun. I will see you in the next video.